Like Mithila said, we are actually deep diving into SMEs and solving for their daily day-to-day needs, so that it can help them in generating good cash flows, so that projects and their manufacturing things can be executed.
Hey everyone, good evening. This is Grishma. I am the founder of Trust. Also, am I audible?
Yeah.
Yeah, I am developer at Microsoft. So, Swasthati. So, Swasthati is more like bringing health compatibility to matchmaking industry. So, discussion of health related issues is always and even today considered as a taboo. So, that's not how it's supposed to be. Everybody values health, everybody wants health, but nobody even discusses about health or after pre or post marriage. So, marital checkups are not very common. So this is what Swasthati is more about. So it's more like where health meets love. Yeah. But thank you.
Can you come a little closer? Closer to the speaker. Come closer and speak. Yeah. And just quickly do this in 5 minutes for the rest of them, and then we get started.
Hey, this is Vamshi, and I'm the co-founder of Hello AI. What we are basically building is AI voice agents for sales, customer support, and recruiter teams. So our AI agents will handle end-to-end conversations when it comes to leads, customers, and also your prospects. What we currently are doing is building two modules, where one, people can come up with their own API keys, and we will provide them the infrastructure to build their own AI voice agents, depending on their requirements. Secondly, we already have a pre-built modules where you just need to let us know what your use cases are and we'll deploy it through your platform. Thank you.
Anyone else wants to do this?
Hi everyone. I'm Shikha and I'm the program manager at a company called the Network of Indian Cultural Enterprises, or NICE. And what we do is we support startups which have an Indian cultural element in their offerings or services, and we do that by running incubator programs for them, connecting them to the market, and providing investor connects as well. So lovely to be here and excited to see who all I can network with you.
Hi everyone, I am Sushil Modi, co-founder and CEO at Zeppelin. We are in social commerce space. We are building a curated marketplace to connect resellers with trusted suppliers. So last year, 19 million resellers sold 12 million worth of goods in India, and these resellers are mostly Indian housewives from tier 2, 3, 4 cities of India. And their procurement is completely broken. They procure from multiple different WhatsApp groups of wholesalers and other resellers and all. So what we do is we solve for that and we make that completely seamless. Thank you.
Hi, this is Bharat. I'm co-founder at Numerize. We're trying to solve the problem of accounting for growing organizations. So we're building AI agents who work as your virtual accountants to do this stuff. Thank you.
Wonderful. Thank you. Have you missed anyone? Okay.
Hello everyone. My name is Krishna Gopal and I'm the co-founder of an edtech startup, Eduze Academy. So what we do is that we run upskilling programs predominantly with finance and credit teams. So we run placement-oriented courses for people who are interested in credit and finance in the banking sector. So credit analyst program, equity analyst program, venture capital analyst program, stuff like that. Yeah. Thank you.
Wonderful. Thank you. All right. With that, can we have a huge round of applause for you guys for taking your time on Thursday evening, attending this session, trying to do something in your lives and your businesses. What we will now do is we'll straight away dive into what the main agenda for today is, which is hearing from Tanuja. So can we have a round of applause for Tanuja? She's come all the way from Singapore. She's a partner at Venture Partners, but I'll let her introduce herself and tell her about her background. But over to you, Tanuja. It's yours.
Thank you so much.
I have to thank Tarun. How it all happened was I landed in Bangalore. I put this LinkedIn post up, and somehow we got connected. I think somebody else connected me to you, right? Or tagged you.
I texted you on your LinkedIn post.
Right. And I actually responded to him, and here we are today. I'm so glad I did, and that I get to meet all of you. So maybe the reason I'm here is to talk about fundraising, right? Maybe some of you have already fundraised before, so this is going to be not very brand new, fresh information, but I'll try to keep it as quick as possible. Nobody wants to hear one person talk for a very long time. And then we can open up for Q&A in case you have any other questions that you wanted to ask about.
Yeah.
Okay, so maybe before I begin, I just introduce the fund. So if you have a little bit of context as to who I am and the fund that I'm working or part of. As you may know, my name is Tanuja. I'm one of 3 partners at a very early stage fund based in Singapore called M Venture Partners, or MVP for short. We are a relatively new fund. We've been around for about 4 years, and we manage $55 million US. And that money we set aside for extremely early stage founders. So in some cases, actually quite a few cases, we've even backed teams, pre-revenue, pre-launch, pre-everything, literally a team and a deck. We have made those investments before. And we generally write anywhere between $250,000 to $750,000 US as our first check. We support and work with the team maybe for a year or so, and as you scale from pre-seed to seed to Series A, and you need to raise more capital, we then write a much larger check, anywhere between $1 to $3 million US, so that you can close your next round of fundraising much faster, and basically get down to business instead of fundraising, which takes up a lot of time. Maybe just one other thing to say, we invest across Southeast Asia and India, which is why I'm here. 40% of our portfolio to date is in India, and we like to invest across 3 sectors. That is financial services, healthcare, and consumer, or consumer enablement, which I know is a very big, broad bucket, but yes, those 3 sectors is what we like to invest in, just because we understand those 3 sectors, right? If you're building outside of those 3 sectors, there might be another fund that's more suitable for you and that can give you better advice and guidance, but this is where we have network and we feel like we can really help founders for building in this space. Right, so let me get started with the actual content of today's session, which is Fundraising 101, and I'm going to take this from the lens of this is your first round of fundraising, right? So you're actually just getting going, you've got an idea, you've got a deck, you've got a team. Let's talk about how you can actually get better at this process. So, I want to say that actually fundraising is very, very much like a B2B process in which you will have to have a lot of names or funds at the top of the funnel and work your way down. Now, that's not to say that you should take a spray and pray approach and just reach out to every single venture capital firm that's out there that you can find on Google or that you see on LinkedIn, etc. There's obviously a more targeted approach that you need to take, but you will have to have a lot of conversations because you will get a lot of no's. And that's just part of the process. You will have to form a very, very thick skin as part of the fundraising process. And you'll need to keep adding more names to the top of the funnel, right? Obviously, as you scale and grow and you need to raise more and more capital, the types of names and people you approach will be different. This is like a...
蓝牙已断开。
I swear that wasn't me. It's just basically a continuous process, is basically what I'm saying. So the first thing that you should ask yourself before doing anything else, before thinking about who you should reach out to, is to think about how much money do I actually need to raise. And I tell all our founders, think about your minimum viable raise. What do I mean by that? Especially when you're an early stage company, you need to think about what is the least amount of money that I need to raise in order to get to my next milestone. The milestone will be different for all of you. in some cases, perhaps if you're a deep tech company, the milestone would be a certain betterment in the technology, or your IP or your potential IP gets to a certain stage. For some of you, it's X number of LOIs. For some of you, it's a revenue target. For some of you, it's network building. It's different for everyone, but you need to set yourself a goal, that metric, and that metric needs to be achievable and yet something that you think will be exciting to your VCs that you're speaking to, and figure out what you need to get there. Who do you need to hire? How long is it going to take you? So do the math, right? And sorry, this is I guess the second point. Go to minimum viable raise. I also want to add that you should never ever go to a fund, and we see this a lot. We ask founders, how much money do you want to raise? And they say, I'm raising anywhere between 5 to 10 million, or 1 to 3 million. I'm like, do you need 1 million, or do you need 3 million? Do you need 5 million, or do you need 10 million? Those are very, very big numbers, and there's a huge range in between. When you figure out what your minimum viable raise is, let's say that's 1 million, and you've gone to a fund, and you're saying, I need $1 million. When you've hooked that VC, and they're sold on you, and they're sold on your vision and your narrative, and they believe that you can execute the plan that you've laid out, it is so much easier to go to them and say, hey, by the way, if I raise 2 million now, this is what I'll be able to do instead. Or this is how much faster I can reach this goal. Because if I'm already sold on your company, either A, I might be able to persuade my partners and my investment committee to put more money into your company, or B, I have lots and lots of friends in the industry whom I can potentially co-invest with. But you need to get them hooked first. Can you go to the next one? Yeah. Sorry, the next one. Yeah. The third thing you should ask yourself, so you know how much you need to raise, your minimum viable raise, when do you need this capital? If you have not raised any money before, it's probably tomorrow, but you're not going to get that money tomorrow. Right? The fundraising process takes at least 6 to 12 months, maybe even a little longer in today's world, where, I mean, interest rates are high, there's a ton of things, but basically VCs are doubling down on their existing portfolio and taking the time to really evaluate new companies before they make that investment. The bar is much, much higher to raise money today than it was in the height of 21-22. I mean, when you saw all companies raising tons of money and becoming unicorns every week, right? It's no longer that situation. The focus has shifted from growth at all costs, and it's now come back to, I think, a much more healthier state where it's sustainable growth at some cost, maybe, and a real pathway to profitability, right? So the bar is that much higher for VCs to give new companies money, and that process is going to take a long time. And another reason why VCs actually tend to, honestly speaking, drag the process a little bit is to see how you're scaling as they're having the conversations with you. We're not going to close the round unless you are a superstar team with, you know, lots of exits in the past. You've got tons of great badges, and some funds really go for that. But usually, if you're pitching a fund, they would like to see this company evolve over 1 or 3 months. Is the revenue going up? Are you doing what you've set out to do based on your projections? So that's a way that they're also evaluating you. Okay, so then what valuation should you actually raise at? Which is another way of saying it, how much of your company are you willing to give to the fund in exchange for capital? When you're a very, very early stage company, there aren't that many metrics to go on, so you can't do like a discount on revenue, etc., etc. It's really down to the quality of the team, the strength of the market, and how fast that market's going, and whether the fund believes you have, as we like to call it, the right to win in this space. And if you really, really have strong conviction, then you're able to negotiate a little bit better with your VC. But otherwise, ballpark, you're giving away roughly 20% of your company at each stage of financing. okay, so you know how much to raise, you know when you need to start the fundraising process and roughly how much you're going to give your company away, give off your company away. The next thing you need to do is create a compelling pitch deck. And this is really, really important because every day we receive at least 50 pitches as a team, not me individually, obviously, but as a fund, we receive at least 50 pitches every day. And we, being a small fund, we actually go through every single deck. We don't always respond to every single founder. We try to do that, but it's not always possible. But you can imagine that the time spent per deck is actually quite minimal. Because this is not the only thing an investment manager, a partner, and an associate needs to do a day, go through decks, right? In fact, according to TechCrunch, we only spend an average of 3 minutes and 44 seconds reviewing a pitch deck. And honestly, what we do internally is look at your headlines. So the title of every single slide needs to be an action title. Because if I can go through like 10 or 15 slides and just get an idea of what your company does and who is behind this and where you are today, etc., just from reading those 10 headlines, that already gives you insight as to whether I want to spend more time on the deck or not. So keep it short. 10 pages is ideal, and this is what you need to have in your pitch deck. I haven't gone too much in detail about each and every statement here because there's tons of information online about what should go into a pitch deck. YC actually has great content on their website about how to create a compelling pitch deck at the seed stage and at the Series A stage and what changes in between and what you need to focus on. But the things that we want to see for sure, and it should always start with this, is the problem. And basically, it's the market context. Why is this market large? What are you going after? What problem are you going after? And ideally, it's a hair and fire problem. Like I'm sure you've heard that phrase before many times, like let it be a hair and fire problem. Make sure you're building a drug as opposed to a vitamin. Because you desperately, desperately need that drug as opposed to a nice-to-have vitamin. Then the size. Please let this be a bottoms-up approach of market sizing and not some McKinsey report that you've just plucked one figure from. Like, you are not servicing. Let's take an example. If you're in fashion, in women's fashion, you are not going to be selling to all women globally. You're not even going to be selling to all women in India. You're going to be selling to a sub-segment of women in India in some cities that have the ability to spend X amount. So what really is your real market size? That's a bottoms-up approach. How are you different? That's the solution. How do you make money? What's your business model? Does that make sense? Traction. If you are a pre-seed or seed company, you may not always have traction in terms of dollars, but hopefully you have traction in terms of something else. I'll give you a real example. So we invested in a company here in India called Liquid, Liquide. It's a wealth management app. We were the only institutional investor in their pre-seed round, so it was just us and a bunch of angels. And they had nothing at the time that we invested, in the sense that they hadn't built the product, so obviously they hadn't launched, and they had zero revenue. But they had a team that we felt had the right mix of skill sets to execute this plan, and they were going after a big market. And they had a waiting list of 250,000 people that they had built organically. So we knew that only a small fraction of that 250 people that signed up would actually start using the app once it was launched, but still it gave us insight as to their ability to create a following, right? And they were doing this and adding people every week, like at a very good growth rate. So some way to show that the market is actually interested in what you are proposing to sell, if you don't have actual money yet. Competition, so fairly straightforward thing, how are you different from the rest? How are you going to stand out? I think this is especially important when you are building a D2C brand. And in my short time in India, like I've just spent a month in Bangalore, we're speaking to so many founders. For every 10 pitches I get, 8 are D2C brands. And the hypothesis I'm forming now is that if you're a customer and you're looking for something and you don't know and you don't have brand loyalty yet, you are most likely, obviously I'm generalizing here, but you're most likely going to pick the most famous, the most well-known, the most what you perceive as quality, etc. brand, or you're going to go for the cheapest. And everything in between is going to struggle to attain customers. So that makes some segments or sectors or sub-segments in the consumer space extremely crowded already. And so as a fund, we are looking to back disruptors in a space. I can talk a lot more about that, but essentially you need to understand your competition and you need to have a real game plan as to how you're going to stand out in a very crowded sea, or why you're different. Team, extremely important. I often see this coming up at slide 1, but I don't actually care about the team if I don't care about everything else. Like, if I don't care about the problem and I don't care about the solution and I don't think you're different, it doesn't matter to me who the team is. But if I care about all of that, then I'm going to spend a lot of time on the team page. And instead of logos, which I know a lot of people put, it's helpful for sure. I want to know what you've actually achieved, right? So if you've worked, I don't know, at Tesla, great. But what did you do there? Like, what did you design? Is that product out in market? Really, I want to see your contribution rather than just a logo. And I also want to see complementary skill sets. So this is obviously a fund, like our fund's perspective. Every fund is different, but for us personally, we struggle to invest in solo founders. We have done it, so I'm not saying that we will never do it, but it's much harder for us to be investing in solo founders because one, it's unlikely that you have all the skill sets you need to execute a business, and two, there's just a lot of things that you need to focus on when you're building a company. You are juggling a lot of different things, wearing many different hats. A CEO's full-time job is pretty much fundraising in the early days, and it's going to take up a lot of time because you're going to have like several one-hour conversations, hopefully with like 30, 40 VCs before you get a yes, and then you have follow-ups. Then they go to your data room, then they ask you for more. It's very time-consuming, and you're always fundraising because the best time to fundraise is when you don't need money. So the CEO's job is always fundraising, hiring, creating culture. And there is no way that one person can handle it all, do the sales, build the product, deal with manufacturers, like etc. So hopefully you have a team that has different skill sets, complementary skill sets, and everyone has a clear role and responsibility, and they're not just two competing CEOs or two competing CTOs. Have roles and defer to your co-founder for his or her job, right? Have trust in each other. Vision. I often ask our founders or people we're meeting, what do you hope to achieve in the next 1 to 3 years? It might seem like a long time, but time passes very, very quickly. 3 years will come before you know it, and you should have thought about where you want this business to be in at least 3 years. Hopefully longer. And then your funding plan or your ask. Make sure you have an ask slide in your deck, because the last thing I want is to have gone through all of that, thought to myself, oh, that's really interesting, and then have no idea how much you're fundraising. If you're fundraising $10 million, we're not the right fund for you to be talking to, because our fund is $50 million, so we're not giving out, of our fund to one company. But if you're raising $1 million, then sure, maybe we're the right fund for you, right? So have an ask. Let me know how long this money is going to last you for, and where this company is going to be at the end of that timeline. So what is this company going to look like in 12 months if you're asking for capital for 12 months? Some optional slides, and I know it's coming in and out, but basically if you're a deep tech company, good to have a slide or two on the technology and why that's so important. Key metrics, if you have, I left it on the slide because if you're a pre-seed company, you might not have so much of that, but it's good to show revenues, customers, monthly active users, daily active users, etc. If you have that information. And why now is also quite interesting. So what has happened that is allowing this company to be born today, or that has made this the perfect time for you to be launching a company? Has a new technology come into place? Is it now much easier to create or model drugs because of AI? Like, why is now the right time to be building this? Okay, so that's the contents piece. And I also just want to touch on the design, right? Because this slide over here, in my opinion, is terrible. It has a lot of information. I think it's not too bad because it's got some images there, it's got a chart there. I mean, okay, the headline is not bad either, it's saying something-ish. But I think this is not a great slide. It's got too much going on. And again, keep in mind that your VCs are not spending a ton of time absorbing everything from a slide. So another way to do this, or to say exactly the same information, is actually a slide like that, right? Immediately we get to see that, okay, the industry is large. You've told me it's massive, but here you've actually said it's $50 billion. And you're actually saying so much in this slide that I get it in an instance. I get the average price per kg. I see how much is actually unfulfilled in a plane. Please think about the design aesthetics of your slide. And maybe you don't need to hire a designer if you don't have the money. There are so many softwares you can use. I mean, platforms like Canva are great for this. Just pay attention to the details. Don't have spelling errors, right? Try to keep the same font size in every single slide if you can. Try to keep colors to a minimum. Don't have too small a font size either. Like, these little things matter. It matters so much, actually, especially the spelling errors. Like, if we see tons of spelling errors in a deck, we know that this founder probably doesn't pay attention to detail, and that's a big red flag for us. Yeah. Okay, so you've understood like what you need to fundraise, how long, etc. You've got your deck, you've got the narrative down. Now, who do you approach, and how do you go about actually speaking to investors? We tell our founders to actually build a list of at least 50 to 100 investors. And you shouldn't just randomly have all of their names down on a Google sheet. You should, of course, understand where they're based. Do they invest in India, I suppose, in this situation? Do they invest in your sector and space? Right, so we primarily, as I said, invest in fintech, healthcare, and consumer. If somebody doing maybe, I don't know, drug development that requires clinical trials and FDA approvals, like, it's probably not for us, because although we do healthcare, sorry, the caveat I should have mentioned is that we don't take clinical risk. We take market risk, we take every other risk, regulatory risk even, but not clinical risk, because it's a very binary 0-1. Anyway, so to understand what the fund invests in, look at their portfolio. Oftentimes it will state very clearly on their website, and what stage also, right? And create an investor tracker. I'm happy to share this slide. So I've actually got a template of an investor tracker you can just download and use. Just make a copy of it first. Or you can build one yourself. There's tons of them. Okay, how to build a list of 50 to 100 investors? It's quite simple, really. LinkedIn is a great tool. Use your connections as much as possible to get an intro to the fund, because not all funds look at cold emails coming in. I mean, we do it. I think a lot of early stage funds do, especially if it's a small fund. But if you're pitching to some of the larger funds, you need to find a way to grab their attention, and the best way to grab their attention is through a warm intro. So ideally, a founder that they've already invested in, or an angel investor that's somehow respectable and has a real profile and can help you get that warm intro. That's super useful. So contact other founders, use your existing investors. If it's us, we make a ton of intros for our founders. We do it all the time. Do not email every single person in that fund at the same time, or LinkedIn message every single person in that fund at the same time. It's infuriating because we talk about it internally and then we say like, oh my god, this person has just spammed the same message with the same deck to 8 people in one day. Why? Like, pick who you want to approach. Usually, even associates, and definitely partners, have a sector, like an expertise in a specific sector. So I'm a healthcare partner in the fund, right? If you're building a healthcare company, then ping me or ping the person that I work with. If you're a consumer company, then figure out who you should be targeting and target that person. If you get no response, try someone else, but don't spam everyone. Include your startup name in the subject line, super helpful. Have a call to action at the end of your email or your message. Don't just say, hey, this is me, here's my deck, done. Like, ask for something. And I think instead of saying, I would love a call next week, be more specific. This line actually works amazingly. So I am free to chat on Monday at 2 o'clock or Friday at 3 o'clock. It focuses the mind. It makes it easier for us to say, like, actually, no, those 2 times don't work. I'll usually respond by saying, no, but I can do Monday at 1. Boom, you've got your meeting. As opposed to saying, I'd love to meet next week, and then you leave the hard work to us to figure out when, and you go back and forth. Once we give you a time slot, send a calendar invite. Calendars get busy very, very quickly. You may forget sometimes to send a calendar invite just to block time. And I've already covered that, the attention to details. It's not just in the deck, actually. It's also in the subject title and the name. Many people call me Tanya instead of Tanuja. Maybe it's an autocorrect. I don't know. I try not to think about it too much, but if you call me Tanya like 3 times, I'm like, please, do you not know who you're talking to? So please, pay attention to detail. Okay, if you are cold emailing a fund, sending a message or an email to someone you don't know at all, there are ways in which you can, I guess, increase your chances of getting a response. And that is by sending a great cold email. This is an example of a great cold email. Startup name, so-and-so, what do you do, right? This is a SaaS platform, okay, I know it's what it is, and it's proven to increase sales by 50% in 1 quarter. Our technology is great because of this reason, and some key metrics. Just 3 bullet points is very helpful. We've closed X contracts, we've made this much in sales. You can say, in this case, B2B partnership, and you can say something about the co-founding team. Attach the deck, and I guess the only other thing I would say here is have that call to action. It's not here. Yeah, call to action. And this is a great cold email. Short, sweet, not long-winded. I don't need to spend 5 minutes going through this email to figure out what it's all about. I think you can hear it. Just okay, so now we get to potentially the hard part. If you didn't think all of that was hard enough, you have actually gotten a VC interested in taking a deeper look at your company. They are going to ask for access to a data loop. You'll get that often after the first or second conversation, and that's a good thing, because that means that the fund now wants to actually spend real time and energy going through all of the information that you can provide. And a good data room will help us make a decision that much faster. When founders often ask us, how long does it take for you to make a decision? Like, you're meeting me for the first time today. Basically, what they want to know is, when can I anticipate to get capital, right? And the real answer is, it really depends how good the information you give me is, because someone in the fund is writing an investment memo on your company and has to feel like they know everything in and out in order to defend or speak for you at an investment committee meeting. And if they don't have all of the right information to stand up for you, they're going to flunk at that meeting, and you are therefore not going to get the capital. So you need to arm people with the right information. I'll go through what you should put in a data room, but just some tips here. Have it all in a central area, so Google Drive is super easy and cheap, but you can also use things like DocSend or Dropbox if you want to have more analytics over how long they spent in the data room and what did they download and who has come in and out. And you can also then just easily reject people from the data room if the conversation is ended. Make sure it's super structured in the sense that you have clear folders with clear titles, and you don't have like 100 different documents just thrown in there, right? You should have a folder on team, you should have a folder on like all your, contracts if you are B2B, say whatever, right? Make sure it's very easy to navigate and to find things. I've seen some companies even have like a table of contents page and like a quick, here's how to navigate through the data room section. A lot of people also give view only. If the information is sensitive, then I think it's okay not to have it downloadable, but at the very least, your deck should be downloadable because we will want to send it around to different people within the firm. And if you have it as read-only and I have to put in my email and other people's emails not going to work, etc., you just have barriers to making that information accessible. And then update your data room. The thing I hate to see is you're speaking to me in August of 24, but the most recent numbers I have in terms of sales is January 24. Why? Like, this 8 months of growth, hopefully. Give me the latest information. Okay, I'm not going to go through every single thing here because, again, there's tons of information on this online on how to build a great data room. But these are just some of the things that I think are non-negotiable. So I'm going to take a pause and you can have a read, but otherwise we can go to the next page. Okay, second last bit before I get to Q&A. Hope you're not bored yet of me talking. Meeting investors. So you can go. Our founding partner always says this to me. Not that I'm meeting other VCs to get money, but I am meeting other investors like limited partners to get money. So we raise money from other people, other institutions as well. And in fact, the fund is very much like a startup because I have to raise money and then I have to use that money wisely and I have to return money to them, right? So I'm also pitching all the time. And for me, every meeting is to get another meeting. And it's really, really a push for a decision in the first or second meeting. So instead of sharing with you what I think are frequently asked questions at UC meetings, which I think, it's pointless for me to go through all of that. Obviously, it's going to be related to the 10 or so things that I think should be in your deck. But I'm not going to go through all of that because I think there's tons of information online that you can find. What I want to do is actually focus on what I think are deadly mistakes when it comes to meeting investors. And mistake number one is actually refusing to take a meeting with a fund unless you're speaking to a partner. That's a big no-no. Please don't be so egotistical. The junior people in the fund are usually the gatekeepers. And they are the ones that are going to be writing that memo, usually. And they are the ones that are going to be armed with all of the facts and figures. And if they build a strong case, they are the ones that are pitching your company to the partners. And so if you don't have them on your side, basically you need them to be your cheerleaders. And so it's helpful to build a good relationship with even the junior people in a fund. They're going to be back and forth with you in over email calls, WhatsApp all the time. So take meetings with even junior people. 2, not testing the water. So I always say that if you're hoping to raise from, I don't know, let's say you're hoping to raise from Peak, right, or Sequoia Peak, whatever, I would suggest you not pitch to them first. When you have your list of 50, segregate your funds into tiers. Try to pitch to tier 2 first. So, and it sounds bad to say this, but why shouldn't you pitch to Sequoia first? Because you want to practice pitching. You want to hear the questions that different partners or different associates at different funds are asking you, and see how you can get better at addressing those concerns before you go to your tier 1 funds. So use tier 2, tier 3 as your practice in a way before you approach the funds that you actually really truly desperately want to get money from. Mistake number 3, not articulating the basics. Please get to the point in the first 60 seconds of your pitch. I cannot tell you how many times we sit down with founders and 10 minutes in, if I'm sitting with someone else from my firm and we have our laptops open and we're on Slack and stuff, it's terrible, but someone might ping me, I still have no idea what they're doing. It happens all the time. Just be clear, right? And get really, distill it, make it really simple. So maybe a good way to explain is like Airbnb. You could describe Airbnb as saying, we are a platform that allows rental, landlords can blah, 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 and you can go on and on. Or you can say, we allow homeowners to rent their own homes out when they're not around, etc. I mean, okay, so I'm not doing the perfect job, but you get the idea. Instead of a 90-second spiel about what you're doing, make that as simple and to the point as possible, and say that at the very beginning. Mistake number 4, not knowing who you're speaking to. Again, do the research on the partner or the associate that you're speaking to. Figure out if you have commonalities. Maybe you've both studied in Australia and you can talk about your time there, or this person has worked in a company that you've admired, or they've invested in a startup that you really appreciate or you respect or you've collaborated with. Figure out some commonalities, because it is a very human relationship process as well. And when people like you, they want to work with you. And having a VC on your cap table is not a 1-2 year relationship. It is a 5, 6, 7 year relationship. So if we like the person we're speaking to, then the chances of us investing is so much higher. Even if we have said no to companies that we thought were great, as in they were going after a great market, we thought it was a great team, we may have even had amazing growth traction. But if we think that these people are not people we want to work with, maybe they're not coachable, maybe we think there's conflict between the co-founders or there's no respect there, we've said no. I mean, life is too short and it's just not worth it. So build a connection. Not controlling the timing and pace of your pitch. Usually you're given 30 to 45 minutes for the first meeting or call. And you want to give ample time for there to be Q&A and engagement. But if you take 30 minutes to walk through 10 pages of your slide, you're going to get to the end of the call, you're going to be like, okay, thanks, bye, right? And so you want this to be a two-way dialogue. Actually practice getting through the key messages of your pitch deck quickly so that you have enough time for Q&A. And actually, if a VC is not engaging with you, they've probably just tuned out. And this is a really, really bad sign, right? You want them to be asking you questions. 6, asking for an answer on the spot. It is okay to ask what the process is like. So it's fine to say, what can we expect from here? You know, can you talk to me through next steps? But don't ask for a commitment. And that sounds probably very obvious, but we do get it quite a bit. Like, so, what do you think? Are you interested in investing in my company right now? Which is different from asking for feedback or initial thoughts or initial reactions. Not following up in a timely manner. I actually have a whole slide on this. Right. So, again, this might sound obvious to you, but please follow up. Ideally, within the day, post that conversation. Within 24 hours, post that conversation. Follow up saying, here's the deck we ran through earlier, if you hadn't already sent it before. If they've asked for any information, say like, hey, you know, I'd like to dig into your financial models. Can you send me a financial model? Before data room, if they've asked for data room, give them access to the data room. Make sure you follow up and give them everything that they need. If you have a frequently asked questions, like an FAQ sheet, again, very helpful. Make sure you send that as well. And then leave it be. If you haven't heard back from them, not in 1 day, please, not in even 2 days, but if you haven't heard from them like in 5 to 7 days, I think it's okay to send a follow-up email. And ideally, you should add something new to that to create FOMO. So if you have gotten a term sheet, this would be the best because, I mean, VCs do move in herds, okay? If your round is filling up, we're raising 1 million, we've actually got 60% of our rounds secure already. Let them know so they need to move faster. But it could also be any big wins. We've onboarded X, Y, and Z to take on the CDO role, or you know, so has decided to angel invest in a company, or we've just closed this deal that's going to bring in 100K in the next 12 months. Whatever, right? Like, give them something to bank on. And if you still haven't heard back from them, and it's been now 3+ weeks since that initial conversation, I would suggest you follow up one final time. And here you should say, hey, I just wanted to close the loop. Right? We had our conversation on the 9th of September. I haven't heard from you since. In that time frame, point, this is what we've achieved basically, like 2 or 3 points. If I don't hear back from you within the next week, is it you know, right for me to assume that this is not something for this fund? And leave it at that. If you hear nothing, it's probably a no. But I think for me, if I get an email like that, I'll be like, so I better respond. Okay, just a point on VC speak. So VCs will it's very unlikely for a fund to say no at the first meeting. There are other ways in which you can guess that it's a no for them. And some of those things are here. Let me just get back to you next Monday. Next Tuesday, sounds interesting. I'll need to like do some research first and then get back to you. Next step is for this and this. I mean, they will show some signs of interest, and the best sign of interest is when a fund starts pitching themselves to you. So if a fund starts talking to you about, here's how I can help you. You know, we have, let's say you're looking for distribution of product. We have the CEO of 7-Eleven as our best friend. We can help you get into all of the stores in Malaysia. Wouldn't you like to work with us? Like, they're starting to pitch you. That's a really, really good sign. I'm not saying that this is an indication that it's a no, but you shouldn't take it as a yes. It sounds super positive, but it's not a yes yet. I think this is my last slide, okay? Thank you for bearing with me. My last slide. What to do when you get a rejection. Do respond. To say thank you for your time. We've really enjoyed the engagement. What do you need to see in order for this to be interesting to you? Get something from them. Hopefully they do respond. I think good funds, if they have engaged with you over 1, 2, 3 meetings, will respond to you and say, you know, we'd like to see you hit, I don't know, X amount in revenue a month, or we'd like to see you get to X stores, or we'd like to see this company expand into this city, whatever it might be. Have that, write that down in your investor tracker, because as soon as you do hit those targets, you can immediately go back to them and say, hey, remember our conversation in March this year? Well, this is what we've achieved. I'd love to reconnect and have, take this conversation forward. And then make sure you put them in your mailing list, which is another thing that you should definitely put time, energy, and effort into building. Send out a monthly investor update list, not obviously just your existing investors. That should be way more detailed, and you should have like strong comms with your existing investors. But for everyone else that you've met, even if it's just a email back and forth, pop them into the mailing list and keep them updated. And this way they'll feel like they're getting to know you and they're getting to grow or witness the growth in your company before wanting to re-engage. Next. Yes, that was my last slide.
Alright. Before that, we have a huge round of applause for Tanuja. I think that was amazing. I don't think we have heard a session like this explaining about investment in so much detail. Have you guys heard of anything like this before?
No.
Any show of hands? There you go. So huge round of applause, guys. I don't think the sound justified it. Thank you so much. Thank you for this. Obviously, we'll take a few more questions. We have some time for that, right? Okay, so I'll take the liberty to ask the first one. Where do you find nice investors like you in the country or wherever? Yeah.
I mean, yeah, everywhere. I have so many friends that are investors in India. I think, honestly, like I've traveled to India many times before, but I always spend like a week or two max in some hotel, and it's a very different experience than what I'm getting now, which is living in an Airbnb, and I'm here for like 3 months, and I feel like more local in a sense. And my first week here, I got really sick, and I pinged someone who I had met only for the first time, and she was like, "I'm driving over to take you to the clinic." This would never happen in Singapore. Like, never. People here are so like, look at you! Okay, like, he's just the nicest person, honestly. So they are everywhere.
Yeah, we made her feel like royalty here.
Honestly.
We arranged a car, picked her from the airport.
With flowers. Honestly, he got me like...
We got her here, just so that you guys can have an experience with her. Yeah? So, but I think it was all worth it. I think this was great. And I think the reason I asked that question is because whenever we speak to the ecosystem here, the things that we hear is whenever we go to a VC, they say, "Do you have a product ready?" When you have a product ready, they say, "Do you have traction?" When you get more with traction, they say, "Do you have more traction?" Right? It's just that never ending. And it was really refreshing to hear from you that you guys invest in seed, pre-seed, and then you can just be a founder with a deck as well. And things like that are possible if you reach out to the right people. So yeah, thank you for bringing that perspective.
Yeah, I do think there is. So again, you have to do your research. There are a few pre-seed funds in India. Again, I'm sure there are a lot more than I am aware of because I'm pretty new to the ecosystem. But there are definitely pre-seed funds here that are investing pre-everything. And they're usually like founder operators and ex-founder operators themselves as well. So their advice is going to be very helpful. And also, because the venture ecosystem here is much more mature than the venture ecosystem in Southeast Asia, you have way more unicorn founders, sorry, and people are willing to give back. So I have actually seen so many founders that are saying, we're raising like 500K, but we have 350 from like angels. I mean, angels here are flush with cash. You don't see that in Southeast Asia. Like, you might get 1 or 2 angels on the cap table and they're putting in smaller checks, but here we see rounds that are getting filled primarily from angels. So I guess the takeaway is to network, and there's actually a lot of money in India.
Yeah, so come to sessions like these and meet people. And then that's a really good tip. You said that meet founders who have been successful, who have had exits, so you can reach out to them because they want to give back, they have cash line with
and
them.
Obviously don't ping them on LinkedIn to say I want to raise money from you. Ping them on LinkedIn asking to bounce an idea off them, something like that, and build genuine connections.
Goes a long way. My other question to you is, you've come from a Singapore ecosystem, right? So how's the ecosystem there? Can you tell us a little bit about that, and if people here can reach out to people there, what are the avenues that they can do?
Yeah, I think more and more funds in Southeast Asia are looking to India. it is, as I said, a more mature market. And by that I mean like you've got the entire flywheel going. You've got angels, you've got pre-seed, seed, you've got growth funds, and you have a very robust public market. So IPOs are a real possibility here. And it's less so in Southeast Asia because the venture ecosystem is like 10 years younger. So it's still developing there. So I would say don't be afraid to reach out to funds there that are looking to invest here. There are many that have already placed people here full time on the ground here. So those are obviously the funds to be reaching out to. And I also have to say beyond just the VCs, the founders here just like have way more drive.
You see,
Don't put this on LinkedIn, okay? The founders here have just way more drive and hustle than I see. Obviously, I'm again generalizing and maybe it's because for every idea that I get pitched here, there's probably like 10 other companies that I have met that have pitched me the same thing, and founders know this. So the need to out-execute is so real, and so you have to work extra hard. Whereas in Singapore, the competition is much less. And so people can afford to be a little bit less, hungry.
a little less good. All right, great. So we'll take some questions from the audience. You raise your hand, and then we invite you here, and then you can ask a question. Yeah. Yes.
Thank you. My question is, say, ours is the AI ML product based, and if it is valued $100 million as a potential, but then as you know, as you indicated, there's each stage at which it can accelerate to reach that goal. And then to reach our next goal, the need is only $500,000. What should we be prepared in terms of losing the stake for the VCs? Assuming the payback is less than a year, can we also negotiate parallelly like convertible debentures as an option instead of losing the stake? So it's a two-part question, right? How much stake we should, considering payback period is less than a year. I think depends on that. Depending on that, the second part of the question would be, would the VCs be willing to loan it as a convertible debentures?
So thanks for the question.
Thank
Can I just ask a question first? How do you intend to pay the VCs back in 1 year?
Yeah, like I said, the revenue.
So you want to buy their stake back in a year?
Yeah.
Yeah.
Pay them back along with some.
Yeah. So the cost of capital for every venture firm is 25% IRR, like 25% interest a year. So that's going to be like the benchmark that all VCs at the minimum is going to expect from a startup. Ideally more, right? But the cost of capital for us is 25% per annum. And so that's something to just keep in mind. I think you can negotiate something out with the fund, but it's going to be they're going to always have it at it's like up to them to decide. Because it's a two-way thing. Honestly, the company is doing extremely well and they think that they can make way more than 25% at the end of the day, then they're going to want to convert it into shares and keep their stake in the company. If they actually think that this is going to be a long, drawn-out process and it's not going to be a 10x return to the fund, then they would say, sure, you can buy my shares back. So, because all funds are looking, especially seed funds, we are aware that more than 90% of our companies will probably not generate outsized returns for us. It's, the power law is crazy in VC. We're only expecting like one or two companies to return the entire fund. And if it looks like yours is that company, there's no way we're giving up our shares.
Okay, thank you. So, can I interpret that 25% as a CAGR expected?
Yeah, sure.
That's the minimum CAGR?
Yes.
Okay, thank you so much. And sorry, I didn't still understand what would be the stake that they would expect.
It differs for every fund, but I think most seed funds, again I'm generalizing, there are some that expect far less or that ownership stake is not important to them, but most seed funds will ask for a minimum 10%.
Nice. Thank you.
Yeah.
It's fair.
Okay, great question. Yeah.
My name is Rajah. Thank you for that information, Tanuja. I just wanted to say the slides that you shared is applicable to any sort of B2B sales rather than just selling yourself to a VC. My question for you was, you said you started 4 years back. What sort of capital did you guys start with? What's your success rate been? And the third thing I wanted to ask you was, you said you invest in a lot of startups that are pre-everything. If you could tell me 3 red flags and 3 green flags for your fund to be like, okay, we might not, or we might invest in this startup that's pre-everything.
Well, that's fun. We started with 55 million. That's the first fund. We raised 55 million. That capital is split across 2 vehicles, a pure pre-seed vehicle and then the growth vehicle. Specifically like 30 million and 25 million. The red flags for us would be horrible co-founder relationship. And how do we get that vibe is like we speak over each other, or like one person is rolling their eyes when the other person is talking, you know, that kind of thing. Horrible co-founder relationships is a no-no. Does a founder like actually say do what they're going to say? So if you tell me, please give me until the end of this week to get my data room to you, and the end of the week has come and a couple of days post has come and I still don't have the data room, I know that I'm not to trust you. Holding back information at any point is also a huge red flag. It could be the simplest thing, like we could be talking about your competitors and you've purposely left out someone, or you actually are genuinely unaware and we know more than you. Huge red flag. Green, the converse of all of that, right? Like you are so giving of information. You are even talking to us about where you see your weaknesses, which is great for us also, because you should know what your weaknesses are and we can help you get better at that over time. It could be a key person in your team that's missing, etc. Great co-founder relationships. Hopefully you've known each other for a long time, you've worked together, and you have the complementary skill sets. And 3, I think just a different way of approaching or solving a problem that is huge. And we can foresee this becoming like a 100 million revenue company.
Thank you for that. And what's your success rate been like?
I mean, I'm not allowed to give you our IRs and stuff, but I can tell you that we've been investing over the past 4 years, and more than 50% of our companies have gone through their A and B rounds already, and the remaining 50% are all still going. We've had very few losses. We've had 3, and the rest are still working through the capital that we've given them. So.
Yeah, 4 years is also a very short period, right?
It's a very short period, 4 years, and we're actually still deploying capital. So we're still in our investment phase, which is part of the reason why I'm here as well, the post that I put.
Okay. All right. Yeah. Please come. That's the advantage of sitting in the front.
Thanks for coming, by the way. Love the session. My question to you is, you mentioned in your talk that the 2021 to 22 period witnessed a huge influx of investments, especially in India, pre-seed, actually pre-revenue, everything. What happened after that, and what made investors so guarded after the 2022 time period? As an investor, what are your thoughts on this?
Oh, we could talk about this forever, but to put it simply, cost of capital was cheap, right? You had like 0 interest rates, and so people were investing. When I say people, I mean institutions, endowment funds, pension funds, etc. Those are people we raise money from, or companies, institutions we raise money from. We're looking to put money into firms that could give them that interest, because the markets in the US were 0 interest rates. it's not that way anymore. We've got high interest rates today, so they're like, why should I take? It's always a risk reward. Why should I take the risk on VC when I can put my money in FD and get X% every year with zero risk? So that's just one example. Then you've got the Ukraine-Russian war, you've got unrest in Israel, like all of these things play into how bigger institutions allocate capital. And when we find it harder, VCs find it harder to raise their next rounds of financing, we are also more cautious into who we're giving money out to.
Yeah, so what you're trying to say is a lot of these things are like macro level, and we may think that some startup has done something, that's why these things are happening, but a lot of this is like macro level, where the funds are coming from, and how those like large institutions are thinking about how to get out of the funds. Yeah.
So just a quick follow-up.
Yeah.
MBB is a Southeast Asia-based firm. How important is the China plus one strategy? Do you think it's a strategic choice for you guys to take big investments in making investments?
Well, we're based in or I should say the bulk of the team is based in Southeast Asia, and we're a Southeast Asian domiciled fund. By that I mean, we're not AIF and we're regulated by the Monetary Authority of Singapore, so it's a different structure. But from day one, we've been investing in India. So that's why 40% of our companies are here to date.
Awesome. Thank you.
Hi Tanuja, Varun this side. Thank you for this session. First of all, I would echo Tarun's point. I have been attending these kind of sessions, many VC sessions in the past, but the details you have shared, it's like pretty eye-opening. So thank you for sharing all those details with us candidly. My question is all about, right, when a startup is having like a pre-everything kind of scenario, right, they're still building the product, the validation is not there in the market, and they're still hustling, building it, right? At that stage, funding is not the only thing they're looking. More than funding, they're probably looking for mentorship, right? And always trying to find the right mentors. So, let's say, what would you advise them? How do they find the right mentors? Because they are trying to reach so many people, right, in the ecosystem. We talk, get that advice. And the right advice can, for example, people like, let's say if I need a mentorship on the VC, maybe not looking to raise funds, but definitely mentorship is always welcome, right? How do we reach out to, say, people like you to get that kind of mentorship? And do you also have, for example, VCs and some these days have started, say, a bootcamp kind of services, right? Or accelerator kind of services to give that kind of mentorship support. Does NDP also planning to do something like that in future so that we can also nurture founders, build accelerators, and then it will also help them build a funnel out of that, right? So, two key questions, like how do we get
how to find mentors, and are we intending to launch like an incubator accelerator? Yeah.
Thank you.
How to find mentors, I think I go back to what I said earlier, like you actually have to genuinely build relationships with people. Nobody's going to want to spend hours with someone they don't know or have no vested interest in, but you can get mentorship from your angel investors if you have any. If you have a VC fund, then there's always a point person in the fund that is working with you. And I think that is the advantage actually of raising from a smaller fund rather than raising from a huge fund. Because in a huge fund, you're highly likely not going to get the partner's attention. You're highly likely going to be given to an analyst to manage. But if you're raising from a small fund like ours, like I can tell you that we, the three partners, spend so much time with our founders. It's the thing that we do the most, actually. So build genuine relationships and just network. Try to give back to the community as much as possible, and then pick who your fund is. Pick who you want to work with in the fund. Are we going to run an accelerator? No. I have done accelerator programs before, and it is very operationally intensive. Maybe in the future when we are a much larger fund, but if that's something that interests you, I mean, there are a lot of huge funds that are doing it, Excel Atom, Sequoia Search, yeah.
Okay, yeah.
Hi Tanuja. Considering how all the VC firms have funds and they have to close it at some point and give some returns to their LPs, a startup that has a growing TAM, growing markets as of now, but they have great execution. It takes a while for the venture fund to realize that they're not going to make money in that fund. Do you still think that VC firms invest in such kind of companies which have promising markets in the future but not as of now? And what should they do? Because that seems like a long run, and VC firms nowadays have funds of very short durations and they have to give returns to their LPs. So what would your advice be for such kind of a startup?
I think you need to be very careful who you take money from, right? And this is a conversation that you should have with your VCs. Some funds have more patient capital than others. It could be a CVC, like a corporate venture capital, that is investing out of their cash flows with balance, right? As opposed to a typical fund that has a 10-year life. If the market is yet ripe, or you're building for a future market, then the conversation with the fund would be an alignment on when you think that's going to blow up and when you can see that scale. That's one. The second is to have alignment on exit opportunities for that fund. So your exit opportunity might be, or your exit goal might be an IPO, but that's going to take potentially longer than 10 years, way longer than a fund life. And so I need to understand how I can exit my stake in this company in 3 years, 4 years, 5 years, whatever that may be, depending on where I am in my fund life. And it's okay for you not to have IPO'd by the time I need to exit my stake. I could sell it in a secondary transaction if you're doing very well. Or if we have an alignment on an acquisition play in X number of years, then my goal would be to understand how can I help ready this company for an acquisition? What kind of EBITDA levels does it need to be? How attractive does it need to be to who, right? And as a fund, we will start making connections with potential buyers. So that's something that we pride ourselves on doing, working closely with the founders on their exit plan and preparing the companies for that. It helps because 2 out of the 3 partners have private equity experience as well, and so that's what they do, right? So we have a very PE mindset to VC investing. But it's all this discussion between your VC and yourself, and it's a two-way street, right? We're not picking you, you're picking us as much as we're picking you.
So I can say, now, concluding this now, you're trying to say that I need to provide an exit plan for about, let's say, a year or 2 or let's say 3 years and project it in such a way that the fund understands it, even though the market is growing.
Yes.
Right? Thank you.
Okay, take one from the back, Mitlesh. How many more questions do you have? How many more questions do we have time for? 8:20. 8:30? Okay, 10 minutes.
Thank you, Tanuja, for an insightful session. I'm Mithilesh. I am the founder of Fundraising Solutions. We are an aspiring fintech company. We want to solve the largest problem of business in India, that's credit. Right? So my question is, I've been part of $2 billion companies each, and almost doing 12,000 crores of revenue, both of them combined. So, but both not into profits or just cutting profits right now, despite being huge. And maybe the effect has rubbed on me, or to take a standard, fundamental kind of approach, delivering 36-40% returns in a standard way, bootstrapping or being profitable since day one, every deal, every structure, right? So, but sometimes we feel as founders overwhelmed. Yeah, 12,000 is a very large number, but we're trying to be profitable since the beginning. Will it affect who we want to be or what we want to be in the future? Or what is the VC perspective when we see such companies? Because we hear 30x, 40x, but at the same time we hear long-term 5% in units of relationships together. So our perspectives keep changing, but we're holding strong right now. But I wanted to hear from you as to how you would take it from your perspective today.
Honestly, my answer would be, it doesn't matter what the VC thinks.
Okay.
It doesn't matter, because you'll find a VC to fit every profile, right? You'll find a VC that says, we want to have a 5-7 year relationship with you. You'll find a VC that says we're only investing if we think we can get 100x. We find a VC that says you can have 100 million in revenue in 3 years. They're all out there, and you shouldn't listen to any of them. You should just listen to yourself and build a company that you think is best suited to you and your co-founder, and prove it out to yourself. And when you feel the time is right to raise capital, then you have something to showcase to your fund and find a fund that fits. Right? There is no template for doing this. I mean, I met a company, I was just telling you today, I met a company yesterday that has been running for 7 years. They have not raised a single cent of external capital. They've bootstrapped all the way. They're not yet profitable, but they're doing like 10 to 12 million US dollars in revenue a year. And now they're trying to raise a small round only for expansion. And we are very interested. We're talking to them, right? So there is no template. Just do what you think is right, and don't worry about what any VCs think.
Right. Thank you so much. All right, wonderful. Okay, we'll take one last question. Give Bharat a chance. Sorry, guys.
Hi, Tanuja. So, just want to know how would MVP be helping us if our product has a global potential in taking us global, more specifically Southeast Asian markets?
It would depend what the product is. So, I think one of our best, value adds to companies that we partner with beyond everything that I think all funds do, which is helping you with your deck and making intros to other funds for future rounds of financing, etc., is our network. So we actually raised $55 million from a select group of individuals primarily. A few family offices, but mostly individuals. And we curated this group to be able to help in the 3 sectors we invest in. So we have many CEOs of banks globally, we have CEOs of hospitals, we have unicorn founders, and these are the people that we tap on when we need advice or a company needs to expand to different countries. So again, this is actually a very good question for you to be asking the VC you're speaking to. What's the value add that you can bring to the table? And yeah, again, it's a two-way picking situation.
Wonderful. Thank you so much, Tanuja, for patiently answering all these questions. Can you have a huge round of applause to her? So, a couple of logistics. What we will do now is we'll do like a group photo with everyone, and we'll do it differently this time, guys. We'll call everyone here so that people can sit behind us, in front of us, and we'll try and do a group photo that way. And then we'll open up for networking for some time, so you guys can sort of network and chat among yourselves. We will have photos, reels, and videos available for today's session, so do ping us on Instagram or other socials to get those, and we'll shoot those out as well. But thank you so much, guys, and we'll gather around.
I think we should thank Coca-Cola for organizing.
Next time, bring your friends. All right.
Oh yeah, sorry, one last slide. Actually, I added it at the end. So we, as a Southeast Asia India fund, we actually wanted to do a bit of research for ourselves. Initially started out this way to figure out who are the people that are creating outsized companies in the different regions, and what does that founder trajectory look like? Have they worked in certain institutions? Have they gone to certain universities? I think those are 2 things people always look at, but do the co-founding teams know each other? Have they spent a lot of time abroad? We looked at a whole range of different things, including female founders. This is actually a very interesting stat on female founders in unicorn companies. We decided to publish it as a report. It's not very long, but it's there for you to access if you want to.
Thank you so much once again. All right. Cool. All right, guys, come over, and then we'll do a quick group photo, and then, yeah, you guys can hang out. Can we have a round of applause for, Harsh, Mitra, and Senajit, and thank you, International Poker team as well for helping us out. Thanks, guys. All right, come over. Yeah, you can sit. Be visible. Yes. So for people who get a chance to pitch today, so we have 3 people who were selected and they pitched. So, what you can do, go to their website and then apply over there. Yeah. So. All right, guys. Quickly, please come on.
Yeah, I have my own equity. Not surplus, but assets, money, cash, savings to sustain ourselves. Again, salary becomes an important part for us to run family. Be in touch. Thank you.
Flag end of the year, more business happen and there is more capital. User.
Yeah. Can we please?